Hello guys, today we are going to take a look at LIFO, FIFO and weighted average measure to manage inventory. So let's just dive into it, and this person has an opening stock of 10,000 units. Okay, this is the opening stock, which is nothing but stock which the trader had from previous period, and this is unsold. This was something unsold, and this was something which he carried forward in the next period. Okay, maybe the next quarter or something like that. And let's suppose that he purchased 30,000 units more, then he sold 30,000 units. Okay, this went out, this came in, and then in the end he was left with 10,000 units to be carried forward to the next period. Anyways, so if you see now that 10,000 units were purchased at a price of, let's suppose this is $8. Okay, now which would give you the total cost of that inventory to be at $80,000. Now suppose he bought another 10,000 in January, this time at $10, it would bring his total cost for this month of purchases to be around let's suppose 100,000. Okay, and what we did here is just multiply it, right? Straight away we are multiplying it. So same way in February it was $120,000, and in March it was $150,000. Okay, so the trader had around $450,000, okay, worth of inventory. Okay, so how did we get this? This is 11.25 is rounded off. So how did we get this 11? Is the cost of each unit. We just divided 450,000 by 40,000 unit, which is cost of each unit. Okay, so let's just move on to the next slide now. You had 30,000 units and you sold them at 20 each. Okay, so you received around $600,000. Okay, you received $600,000, and as you did know that the beginning inventory we had, which was 80,000. Okay, so this is from here. Okay, this value, and the purchases, what purchase we have made, this value, 370,000. Okay, $370,000. This is nothing but the addition of these things. Okay, these three values. Okay, which is the purchases we made. This is the addition of these, and the ending inventory for every method, be it LIFO, be it FIFO, and average cost. These are different. The reason being is that we are assuming as if whatever inventory we bought first, we are selling first, and in the LIFO method, we are assuming whatever inventory we are selling is the latest. Whatever came at the last, we are selling it off first. Okay, so the oldest inventory is just sitting there in the warehouse somewhere. Okay, and in these cases, obviously they are not perishable goods, because you won't go for LIFO if the goods are perishable. Anyways, let's see why these figures are different in the ending inventory. So let's suppose that we'll use a good color for this. Let's suppose we'll use red for FIFO. Okay, so what we have seen here is that we have sold 30,000 units, okay, at 20 each. So with first in first out, we'll probably well, not probably, will always be taking this, and this. Now this is 30, okay, this is 30,000, these are 30,000 units, and now whatever is remaining, the value of that will be calculated. So 10,000 is remaining at the rate of 15, and the answer is this. Okay. For LIFO, what we did is we'll be using the units which came at a later stage, the last in first out, which means that whatever units we received in the last, we'll be using it in the prioritizing to use it first. Okay, so we over here we used this unit, and these units. Okay, now this one was remaining. Okay, this we did not use. So this is nothing but the ending inventory for LIFO. If you remember, I did tell you that the oldest inventories might sometimes go unused for a long period of time with LIFO. Okay, so 10,000 multiplied by 8, we get our answer to be $80,000. Okay, this is our ending inventory for LIFO. Okay, and for the average cost method, what we do is we just divide this by this. Okay, and what we get is 11.25. This one I've just rounded it off. Okay, anyways, so we are what we are doing is this is dividing it with that one, and the answer would be $11.25. So that 11.25 when multiplied with 10,000, okay, when multiplied with 10,000, we get this answer. This is so this is our ending inventory. So how is cost of goods sold calculated? Cost of goods sold, the formula for cost of goods sold is beginning inventory plus purchases minus ending inventory. This we would subtract. Okay, so $80,000 plus 370 minus $80,000 will give an answer of 370. Similarly, answers for these have been mentioned. Okay, we will add this to this and then subtract this. Okay, we'll subtract the ending inventory from the sum of these two, and then we'll get this answer. Now let's suppose there are this is a fixed cost, and let's suppose there is an expense of $100,000. So we'll also have to subtract that from the revenue. Now we'll get net income. How will we get net income? Is that we'll just subtract these two. These are our expenses. Okay, we'll just subtract these two from our revenue. $130 is net income for LIFO. $200,000 is net income for according to FIFO, and according to average cost 162,000. Okay, 162,500. Okay, this is the answer. Now if you look closely, all these three things are giving different answers. Okay, one is giving this FIFO method is giving the highest net income, which is 200,000. The LIFO method is giving the lowest net income, which is $130,000, and average cost is giving 162,500. Okay, so if you look closely, the average cost method will lie in between FIFO and LIFO. Okay, it will be less. The net income for average cost will be less as compared to FIFO. Now please remember one thing, that as you know, if the net income is more, we pay more tax. Okay, if the net income is less, we pay less tax. So companies would prefer, you're right, FIFO. Companies would prefer this method, but many a time this is not allowed, and they have to go with FIFO and not LIFO. Companies would prefer LIFO, but they have to go for FIFO because you know, the net income would be shown greater in FIFO. So anyways, so this is how we calculate FIFO, LIFO and average cost. And if I would, you know, just, you know, put these figures on the graph, these net income, okay, what we would notice is, and the FIFO will show that the company's net income is highest. Okay, the LIFO method would show that it is lowest. Okay, and the average method will be somewhere in between, which was, if I'm not wrong, 160 to $500. Okay, this is something somewhere in the middle. So if you like this video, please share it with your friends. Thank you.